What is going on, guys? This is Buy and Hold. I am your host, Thick Teddy, and let's get talking about today's stock, Tesla. But before we do that, I want to say thank you guys all for tuning into this video. I love making them. I love helping you guys out with your long-term portfolios. Give this video a like, give it a comment, what you think of the video, and also subscribe to my channel for more of these videos. Let's get into it. This is Tesla. This is Tesla video, baby. Tesla, which is the beloved long-term stock for many, many people and many, many young people in particular. So let's talk about it. Let's figure out why. Let's figure out why you might not. Let's figure out both sides and let's make a decision ourselves. So this is the technicals for Tesla. This is the weekly. So let's draw some zones in here. So obviously we have this demand zone that we are currently in, which sits right about what is this? About 180, 190-ish down to 181-ish. And that comes from March 2021 and May 2021. And then below that, let's draw some lines in on here. We have a level here right about $151. And then we have another level down here at $110. We have a last level down here at about $62 to $63. Let's talk about why this is significant. Is because Tesla has ran all the way from, if you go back into to like 2019, $22 a share, $10 a share at its minimum. So it's been $10 to $20 just 2 years ago, and now it's 180, and it actually topped out at $400. So it's down over 50% from the peak. And I think there'll be some reasons why that you might understand later in this video. But this weekly is looking not that great due to the fact that it just broke below the demand zone that it was sitting in before the current demand zone. It had one about $209, $210 all the way up to $219, $220-ish dollars. So it broke through that demand zone, and now it is flowing into the next demand zone. And it's possible we see this 200 MA. It's possible we see these next few supports. I would like to say that this is a possible bounce zone, but with the market doing what it's doing, it's more likely that this is going to want to test that 200 MA. 200 MA is a good spot to buy a starter on things. So after you watch this video, you can come back to this technical analysis and decide, where you think the correct starter would be. For me, I think the starter would have to be below $150 for a few fundamental reasons, maybe even closer to this $110 level. And there are a lot of fundamental reasons, like I've said many times, about why I feel that way. But let's not make you guys wait any longer. There is one thing that I wanted to talk about before we move on, is the fact that this is kind of just a big head and shoulders. If you really, really want to look at it that way. Tesla has a weekly head and shoulders forming, and it's there's a bit of difference in the shoulder heights, but it is very, very much so there. Looking at this, the downside would be all the way back down to that $20 level. I don't think it gets that low for many, many reasons. But there is some downside, further below this neckline, and the neckline is actually what we're in right now, based on that the first neck from that first shoulder. So if this head and shoulders plays out, then we truly do have lower on Tesla. All right, here are the fundamentals on Tesla. The fundamental trackers, the valuation trackers. We have the market cap is right about 600 billion, income is 11 billion, sales are 75 billion. First thing that sticks out to me here is the sales to market cap ratio is not even what we would like it to be. We'd like it a little bit lower if we're going to be going long on a stock like this. Usually when we're looking at long-term tech stocks, their price to sales at least will be a bit lower. The PE ratio on Tesla, everyone knows it's astronomically high. It's 60. Market average is somewhere around 15, maybe a bit lower due to the market downturn we're seeing. But we would like to see the PE somewhere, I would like to say 40-ish or below for Tesla would be kind of my threshold based on some mathematics that I've done. And then price to sales, I get that it's 8, and 8 is not bad, but I would love to see it like below 6, which would kind of line up with the PE and PS both moving down a bit with the market cap, because as the market cap decreases, the share price will pull that market cap down, and then we'll get a lower PE and a lower PS. Those would be what I would like to see threshold wise for maybe thinking about going long. But you guys can see the EPS is very, very good. Their margins are pretty decent. Debt to equity ratio is not bad. Quick ratio is not bad. So they have the ability to pay off debt if they were to take on debt. They don't have much debt right now. Cash per share is a bit low, and book per share is not, great. But this is Tesla. We have a little bit of a cult aspect to think about there. So the big things that we can take away from this fundamental side of things are it needs to get a decrease in market cap slightly, more than it already has, so that PE ratio comes down below what it currently is. We want to see it somewhere closer to 40. I would love 30. 30 would be fantastic. That PS ratio, we would love to see it, below 6 for Tesla specifically. That's not a widespread rule. That's just what I'm feeling on Tesla based on some other things I've looked at. Everything else is great. Institutions are adding, insiders are dumping. We obviously know that that's Elon Musk, and we will talk about that later. Let's talk about their earnings. So they obviously have good EPS, they have decent numbers on that. So let's go to the actual earnings numbers. So we have in 2020, they were reporting right about 14.5 cents per share. And their latest earnings, they reported $1.05 per share. This will be their first time crossing over $1 per share. And they've just been steadily increasing. We see 14, 25, 26, 31, 48, 62, 68, 95, 75, and $1.05. Their revenue over here steadily increasing. 6, 8, 10, 10, 11, 13, 17, 18, 16, 21. So we see some really, really nice earnings growth for Tesla. You can see why people are very, very interested in investing in this company. The growth of it has been, exponentially growing quarter by quarter by quarter. That's exactly what we want to see for a stock that is something that would be long term, something in the IRA, something that you're thinking in 5 years could double, triple. That's exactly the type of movement that we want to see on their earnings reports. They have a good track record of beating as well. Look at that. Beat, 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 beat. If you say a word that many times, it starts to sound funny. It starts to sound weird in my head. But you guys can see that they're beating their earnings estimations, and they're also just steadily increasing the company's profile. They're steadily getting better on beating that EPS, and they're steadily putting revenue in every quarter. That's something great that we like to see. Let's talk about their innovations. So this is just an article I pulled. All the innovations by Tesla beyond electric cars. Let's just scroll through it quickly. So we see Powerwall. It's like a backup, almost like a backup generator, which it is solar powered. They have solar roofs and solar panels, which we all know what those are. You put them on the top of your roof and it helps power your home. They have a mega pack. What's a mega pack? So it says Tesla Megapack is transforming how we power the grid, delivering giga-scale capacity, enabling the world's largest energy projects. For instance, its blah 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 project can provide record energy capacity enough to power every home in San Francisco for 6 hours. So it looks like they're working on the grid. And then we have electric vehicle charging stations. I've seen these around. There's actually one about a minute and a half from me. So that's very interesting to me too. I've test driven a few Teslas. We'll talk about that a little bit later. Tesla Gigafactory. In a bid to accelerate the world's shift to sustainable energy through increasingly affordable electric vehicles and energy products, they're planning to ramp production. The Gigafactory will supply enough batteries to support Tesla's projected vehicle demand. Interesting. So they're doing some outside stuff, some green energy type of stuff is what Tesla is doing, which is honestly great for the future, and great for their company as well, because we're moving towards that and we're going to need that in the future. Let's move towards electric vehicle volume sales for 2022 first half. We can see BYD, which is European and Asian, has the highest. We have Tesla here in second. Very nice. That's great. Tesla's in second. But the thing I want you guys to take from this is I want you guys to look at how low the company, the companies down here that are very, very prevalent in America. Honda, very prevalent in America. Toyota, very, very prevalent. Ford, very, very prevalent. GM is up there. But these names down here like Ford, Honda, Toyota, they're going to be increasing their electric vehicle production like crazy in the next few years. And what does that mean? It means that the market cap of these companies up here needs to be distributed to the sales that Ford, Honda, and Tesla are going to pick up via those electric vehicles. One thing I will say on that is, Tesla has the jump start here, but they do not have the sustained name value that Honda, Toyota, and Ford have, and GM as well. So those companies have kind of I guess, the reputation in America that Tesla does not quite have yet for many reasons. But I think it's good that Tesla's in there early. It means they're going to stick around because I think a lot of these companies here are going to fall off completely. A lot of these companies going to completely end up dying, crashing, burning. Obviously these big names are not, but some of these like Neo, Geopang, if they were in America, they might crash and burn. But Tesla's large enough to be in America with the big boys of GM, Ford, Honda, Toyota. Obviously I know that those companies, a lot of them are not American, like Honda, Toyota. But the big thing will be what amount of their market cap Tesla do we see distributed, or how much of that market share do we see distributed? Because that'll impact their revenue growth, that'll impact their market cap of their stock as well. So we'll just have to wait and see. But I think that we see Ford, GM, Honda, and Toyota, and maybe even VW take a bit of that Tesla market share. And honestly, the Tesla market cap will follow, in my humble opinion. All right, so we saw Tesla being crushed in Consumer Reports and reliability rankings. So they've improved, but it's still not where it needs to be. They fall near the bottom with Mercedes-Benz, Jeep, Volkswagen, GMC, and Chevrolet. We don't like to see this for Tesla. If you're long on Tesla, we want Tesla to be, constantly getting itself into that top echelon of reliability, because what do Americans nail home about their cars? How long they last. You hear about every guy in Walmart is talking about how long they've had their Ford or their Chevy. It's big for Americans. So Tesla needs to get that under wraps, and get that under wraps very quickly. All right, and then the last thing we have to talk about is Elon Musk's Twitter deal. First off, his attention is going to be, half in the door, half out the door for Tesla right now. He can say the otherwise as much as he wants, but he can't be two places at once, and his mind cannot be in two places at once as well. So he's going to be thinking about Twitter for a decent amount of time. How much of him is kind of tired of Tesla now that it's very successful, and how much of him wants to take on a new venture? So we're going to see. But the other thing too is he took a very, very, risky deal. It says here, I'll just read it to you guys. Even though Mr. Musk and his partners are investing over $20 billion in cash to buy Twitter, he also intends to raise money by taking out a $6.25 billion loan backed with Tesla stock, down from $12.5 billion in an earlier outline of the deal's financing. Analysts said it was hard to think of another deal in which an individual incurred such a large debt against shares, known as a margin loan, to help pay for another company. And then it says the margin loan could go wrong. The margin loan to buy Tesla could become a destabilizing force if Tesla's stock value were to plunge, which we've seen the PE ratio, guys. That is scary. Their PE ratio, something happens, like Tesla finally misses an earnings report. Their PE ratio you start to see Ford, creeping up. You start to see GM creeping up. Tesla could, lose a decent percentage of their market cap in a week. A steep decline might prompt the banks to sell their stock collateral to recoup the money they lent Mr. Musk. It's like it rains, it falls. This is FTX sort of thing. People sell a stock and then banks sell a stock. It rains, it falls, baby. So I'm saying Tesla, based on all of this, is not a failure. It's not a failure to say buy and hold on it, but it's not a buy and hold. I've been thinking about this for an hour or so. It's a hold off and buy. That's kind of the main thing of this video. It's a hold off and buy. So hold off, find your levels you like. I think 110 would be a great level to buy this. based on the PE ratio, market cap, all that kind of stuff. But yeah, so I hope you guys enjoyed the video. I put a lot of work into making sure these are accurate and give you guys a good view of where the company is right now. So thank you guys for tuning in. And yeah, have a great rest of your week. Peace out, guys.